And I spoke to the chief economist of S&P Global Ratings, Paul Grunwald, to find out what he made of the Fed's action and a little bit on India as well. He's here for the Crystal Annual Conference. Hear him out.
The Fed action and the statement were pretty much as we expected. Chairman Powell has been clear that the Fed is happy with the state of the U.S. economy. The growth is at or above potential. The economy is running close to potential in terms of level, and the labor market is strong. So this was very much in the spirit of an insurance cut. We know inflation's running a bit below the Fed's target, and we know some of the risks are on the downside. So the statement saying that it was an insurance cut, not necessarily one and done, but not the start of an easing cycle. The Fed will be watching the data. So overall, it was pretty much as we expected.
Paul, does it also sort of extend to the global economy and the expectations that we're moving into easier monetary policy cycle, but perhaps tempers the expectation that that cycle would be an extended one, whether it's from the ECB or others?
Yeah, well, it's not really a cycle. I think the Fed was clear that it wasn't the start of an easing cycle, and it was just an insurance cut. We've seen some language, as you noted, from the ECB as well. They've postponed their liftoff of zero, so Mr. Draghi's been pretty careful about his language as well. But I think there's a point to be made, which is central banks globally, which started the year essentially leaning higher. We were talking about a normalization cycle. Then we had a pause, and now we're going to be leaning lower. So I think, although we've got many central banks on pause right now, I think the expectation is that the next move is more likely to be down than up. But again, it looks like the Fed's on hold, and then they'll have to assess the data and see where the next move is going to be.
Well, what is your underlying expectation on the global economy, and as also, as it reflects in Asia? Are you seeing softness emerge mostly from the trade tensions? Are there other issues which you think we're going to have to start worrying about as the year comes to a close?
You're right. It's been concentrated mainly in manufacturing and trade. So the countries that are more reliant on manufacturing and trade for growth, some of the tigers or the more open economies have seen a bigger hit, and the domestic economies have been faring a bit better. The risk is actually that concentrated weakness in manufacturing and exports would spread to the broader economy, to non-manufacturing and services. We haven't seen that yet, but certainly that would be a narrative for our current downside scenario.
For Asia and for countries like India, that would mean that most of this reflection would come through, again, the export sector, you would assume. So the export intensive economies would see a deeper hit, perhaps?
Yeah, India, if you compared India with the narrative I just proposed, where the weakness is in manufacturing and trade, India is a relatively closed economy, and it's less reliant on manufacturing for growth. I think that explains why India continues to perform very well. We're currently in a bit of a soft path, but we would expect to see India continue to outperform in relative terms, despite the currently slower growth.
There is a narrative building up here that as trade tensions persist between the US and China, perhaps there's an opportunity for economies like India to get in on the global supply chain and build up their export base. Do you see that as a medium to long-term potential?
That will be a challenge. I mean, you're right that the U.S.-China trade tensions remain unresolved. We have seen some trade diversion, in some countries, such as Vietnam and Malaysia, have been able to benefit from a redirection of exports out of China. I think in a sort of an abstract sense, India would have an opportunity there, but it would require some intensive investment in logistics and some liberalization of some of the regulatory apparatus. So I don't think there's a lot of short-term gain there. If the correct structural reforms were put into place, maybe there's a longer-term benefit, but we probably wouldn't say that India is poised to benefit in a big way from some of the trade diversion out of China.
What is your view, as you've spoken to people here during your trip and listened to your analysts here too? What is your impression of India? Because some of the structural reforms that people were excited about 2 years back don't seem to have paid dividends yet. In fact, some are saying they've been disruptive enough to actually take growth down. What are your impressions?
Yeah, I think there's some concern at the current soft patch in growth, but our economists here at CRISIL are relatively optimistic about the medium term. One of my first questions to them was how they saw medium-term growth relative to current growth, and they do see a pickup to a trend growth rate of 7% and perhaps a bit more. You are right about the reforms. One of the things that gets talked about a lot in the rest of the world when looking at India has been the reform agenda, whether it's the bankruptcy law or the GST or the the biometrics and the financing to the rural sector, etc. Those reforms are structural, so by definition they take longer to feed through to the economy. But we think those do provide some tailwinds to the economy, so we would expect to see those benefits flow through. The bigger question is when those benefits flow through, what's the next round of reforms? And there's talk about India getting an even higher rate of growth, and then we would have to see some of the so-called factor market reforms to labor and land to get the growth rate even higher. But I think the general impression of India from where I sit in New York is broadly positive, and the growth picture has been good, and the reform agenda has been perhaps a bit slow, but it has come through, and therefore we're relatively optimistic over the medium term.
Paul, one of the things, structural issues being discussed in India right now, and you would know this from your time in Asia, India always benefited from a large savings pool and the fact that the Indian government's borrowings were almost entirely domestic. Both those seem to be changing because the savings rate is slowing down, and the government for the first time has spoken about borrowing overseas via a sovereign bond perhaps. Any impressions on whether that's a good idea at this stage?
Yeah, I don't think we have an official view on that one. You're right about the savings rate in the rest of Asia. The so-called tiger economies were powered in a sense by very high savings rate financing investment, and India's got a different structure. The consumption and the domestic demand story has been more than the external demand story, and the savings rate has been a bit lower. But I think it's really about making sure that the financial sector operates appropriately. So again, I think the bankruptcy laws there and trying to clean up the bank balance sheets will be helpful. And the whole challenge is getting from savings to investment. If there's an external component to that, that's fine. But it's really a question of getting the financial sector appropriately functioning and then making sure the savings rate's not too low so we can use the savings to support growth.
But theoretically, having seen emerging economies, particularly in Asia and Indonesia as a comparison which is often drawn, is it a good idea for a sovereign to go borrow overseas within limits? Is that acceptable to you, or do you think it's better to stay onshore to the extent possible?
Yeah, again, we don't have a firm view on that. One of the risks for emerging markets generally is that financial global capital markets tend to be a bit fickle. So I think there's a natural reticence to borrow too much globally and have the external financing be subject to the whims of the global capital markets. So I can certainly sympathize with the view that we'd want to keep as much onshore as possible. I don't think there's a global standard, a sort of a rule of thumb for any particular economy. It's a decision of the authorities, and there are risks for borrowing abroad, but again, that's a decision for the government to make. I don't think we have an official view, but we'd want the financial sector to function smoothly, and we want to make sure the savings and investment get aligned. So that's a decision the government's going to make. I'm not sure there's a golden rule for that one.
All right, Paul, we'll let you go on that note then. Thank you so much for your time. Appreciate you taking the time to speak to us here on Bloomberg Quint.
Thank you very much. It was my pleasure.